Assalamu alaikum guys. So this is part 3 of management accounting and this is the last part of management accounting because after this we'll be moving on to the financial accounting. Okay, there also we'll be having 3 different parts like how we have for management accounting. So till now I have done CBE specimen paper for the first three papers F1, F2 and F3 that is known as business and technology, management accounting and financial accounting. Financial accounting I will be doing, I haven't done yet. Okay, so these are some extra questions for management accounting which will help management accounting students. And here in this we already have questions from section B, 3 questions from section B, that's it. Okay, so let us go. You have seen in part 2 how the section B question looks like, so I don't think I have to give an introduction or anything like that. So quickly I can just go to section B. Okay, with the background you'll be given 3 tasks under the background. Okay, worth 10 marks each. So the director of Dhoni company is reviewing the performance of one of his division, and South Division they have given you the sales operating profit and capital employed. South Division operates in the food retail industry, and they have a year ending. They had the sales for the year ending 1.2 million, 1.25 million, and the task 1 calculate the following performance measure for South Division. Okay, when you have seen my part 2, you have seen that there also we have done something similar to this: return on investment, return on sales, asset turnover. The only two new things which was not there is residual income and the market share, but the first 3 ratios we have done there. Okay, so this should not surprise you how to do it, and you have to know the formula for it, by the way, return on investment. So the formula is operating profit divided by capital employed. Okay, what is operating profit? This is 700. There in part 2 when I did, it was profit before interest and tax. I took here they have given us operating profit, so we'll take this only, divided by capital employed, which is 3500, so it is 20%. Next we have return on sales. As soon as you click, you see that this bar will increase, this will increase, and also you are given the marks. Okay, return on sales, it is same, sales divided by, sorry, operating profit divided by sales. Okay, so operating profit is 700, sales is 50,000, it will be 1.4%. Okay, asset turnover to the nearest whole number. Asset turnover is sales divided by capital employed. So sales is 50,000, capital employed is 3,500. Okay, and it is 14 times. Next, residual incomes. Okay, using an imported charge of 12% per annum. Okay, definitely they will be giving you this charge, otherwise you cannot do residual income. So residual income is what? Operating profit minus imputed interest. Operating profit is 700 minus imputed interest, which is 12% on the capital employed, 3,500, will give you 280. Okay, so the residual income is 280. You have to know the formula for residuality. Let me repeat again. The formula for residual income is operating profit minus the imputed interest into capital employed. So operating profit is 700 minus 3,500 into 12%, which is 280. Now coming to the market share. Okay, for management accounting, you have to be familiar with and know the formula for lots of ratios and all. Okay, market share. So market share is sales of South Division divided by total industry sales. So sale of South Division is just 50,000, total is 1250 out of it. So it is just 4%. Okay, very less. What you can do is, rather than you keeping scrolling up and down like this, you can close the task 1 and just keep the task 2 in front of you. Okay, is each of the following an advantage of residual income as a measure of division performance over return on investment? You just have to say yes or no. Okay, so the first one, it is directly related to net present value. Yes, it is directly related to net present value. Second, it ensures that managers will seller purchase with positive net present value. No. It helps in company performance of the managers of division of different sizes. Is it? No. And finally, it makes division managers aware of the cost of financing their division. Yes. And finally, I'm going to close down this as well and only task 3. Which two of the following are non-financial indicators that can be used to measure performance? Okay, that means you have to know the ratios or the indicators to measure your performance, whether financial or whether non-financial. Return on machine per hour, non-productive hours per hour, defects per product per month, or profit per product per month. Okay, which two are the non-financial? So return per machine is something which is financial. Okay, non-productive hours, defects also. Profit is also a financial measure. Okay. Now we are going to the next. This is question 2. So Kin produces a single product. Each finished product requires 3 kg of raw materials. The raw material cost $6 per kg. You have been given the following information. Okay. Prepares budgets on a quarterly basis. Each quarter consists of 13 weeks with 5 working days per week. It is company's policies to maintain an inventory of finished goods at the end of each quarter equal to the 5 days demand for the next quarters whenever possible. It is not possible to hold raw material inventory because of its perishable nature, but it's possible to hold inventory of finished goods at any level. Focus unit sales for the next 4 quarters are. Selling price is given 56 and Kane aims to maximize his profit. Okay, task 1. You can even close down the background also if you want like this. Okay, but we definitely need in front of us, so we are only worried about task 1. Okay, calculate the budget opening. You have to know budget very well, very well in management accounting. I would say if you don't know variance, if you don't know budgeting, accounting, absorption costing, margin costing, all this, don't even go to the management accounting exam. It's that important. Okay, because we have budgeting is a long chapter. We have so many things in budget. Okay, even the variance, budgeting, absorption costing, marginal costing, process costing. So calculate the budgeted opening and closing finished goods inventory for the quarter 1 to the nearest 1,000. For the quarter 1 to the nearest 1,000 units, both opening and closing finished goods. Okay. So what is it? Quarter 1. Okay. What is the forecast sales? First, you have to find for the quarter 1. Okay. So the company's policy is to hold inventory equivalent of 1 week sales of the next quarter. So quarter 1 the sales is 1 point. This one. This is the sales. Okay. This divided by 13 weeks. How many weeks? They told there are 13 weeks. Each quarter consists of 13 weeks. Okay. So divided by 13, it will be 150,000 units. Okay. Definitely it is not 150. It will be no, it is 150 in this case. Sometimes you get actual number as it is. So you don't have to round anything. You can just write it as 150. You don't have to write 1,000 because already they have written as 1,000. Okay. If you are writing this as 1,000, just see what happens. You will not be given marks. Okay. So don't write 150,000 even though the answer is 150,000. Drop down the 3 zeros. Just write 150 because this is already given in terms of thousands. Next, closing finished goods inventory. How to do this? Okay. If you see quarter 2. Okay, it is this 2275. This also divided by 13 because 13 weeks, so it is 175. Okay, why? Because at the end of quarter 1 the company will hold inventory equivalent to week 1 of quarter 2. Okay, so 175. Don't write 175,000, just 175. I'm going to close under task 1 and task 2. The desired closing finishing goods inventory in quarter 4 is 150,000 units. Calculate the budgeted number of units to be produced in quarter 4 to the nearest 1,000 units. Production. Now you have to find production. Okay. So what is the production budget formula? Sales plus closing inventory minus opening inventory. So what is the sales for quarter 4? It is this. Okay, so this plus the opening inventory. Sorry, plus the closing inventory. What is the closing inventory? 150,000. They have given. That this is the closing inventory minus opening inventory. What is the opening inventory? It is 175,000. How is it 175,000? Because the opening inventory is based on the closing inventory required at the end of quarter 3, which is equivalent to 1 week of quarter 4. Okay. So that's why if you see task 1. This is for, okay. So it will be, just look at task 1, 175, okay, for quarter 1. This will be for 4, the opening for quarter 4. So it is sales minus sales plus closing inventory, which is 150,000, minus opening, which is 175,000, which will be 2250. Okay, so 2250 is the answer. Okay, sorry, I wrote in the wrong cell. It is supposed to be here. Okay, close down task 2 and open task 3. Okay, here we have 5 tasks. Budgets to produce this many units in quarter 3 to meet the sales demand and to achieve a closing finished goods. And what is the budgeted cost for raw material usage in quarter 3 to the nearest $1,000? Okay, definitely all the formulas and all I'm not able to show you, but you have to learn it. Make sure that you know. Okay, how do you do it? The formula for raw material usage budget is production budget into material usage per unit into standard cost per kg. So production budget was here 3175 units multiplied by material usage per unit, which is 3 kg, this one, into standard cost per kg, which is 6. This is the standard cost. Okay, so that is 57,150. Okay, I'm going to close on task 3 and open task 4. Now calculate the revised closing finished goods inventory for quarter 3 to the nearest unit, taking into account the restrictions on the raw material supply. Okay, this is like a capital rationing which is happening. So the company's raw material supply is informed that due to restrictions on the manufacture of the material, supply to the company will be restricted to this kg per quarter to the foreseeable future beginning from quarter 1. They decide to purchase the maximum amount of raw material available in each quarter and build up inventory of finished goods whenever possible. Under this restriction, the budgeted opening finished goods inventory of quarter. This is the budgeted opening finished goods. Okay. So now, how many units? Task 4. You'll be shocked to see the answer, by the way. Okay, because the answer is 0. Yes, it is possible that sometimes the answer could be 0. How the answer is 0? That is the question you need to ask, and you need to solve that question first. Okay, so as this, okay, kg of material is available, then the company can only produce how many? Just divide it by 3. Why divide by 3? 3 kg of each finished product requires 3 kg of raw material. Each. Okay. So divided by 3, that means company can only produce how many units? 2.2 million units. Okay. So even taking into account the opening inventory, which is 325,000 units. Okay, this is the opening inventory. The company will only be able to sell how many? 2525 units of his focus quarter 3 sales. So this means that the closing inventory will be 0. Okay, because we are adding that opening inventory with the material needed, which is 2.2 million units plus 325,000 of opening inventory, which is 2525. So the closing inventory will be 0. Okay. Now task 4 and 5 are together, so I have to keep the task 5 open. Which two of the following would not help Kane overcome problem caused by the residential raw material supply? Which will not help? Okay. Make sure that you answer which will not help, not the one which will help. Using the economic order quantity model, seeking alternate source of supply, requesting a rate discount, more efficient use of material. So first is requesting a rate discount. The other one is using economic quantity order. This will not overcome the restriction in raw material supply. Okay. So coming to the next, the last question, and the last for management accounting. Friends, a company uses standard costing to control its cost and revenue. A standard cost card for its old product is given below with the standard cost of apprentice statement of the last month. The reason why you have been given lots of about standard costing and all those things, because this is one of the area where students struggle a lot. Okay, and also the question comes voluminous question comes from there. Okay, the huge volume of question comes from there. You need to read a lot. It takes time to understand, settle which rate to take, which one to multiply, the formula and all. It's easy to forget. It's easy to mess around with the number, unlike theories and all. So that's why in section B, if you see, it's mostly like this, which will be given. A lot of calculations. It takes a time. Okay. So you have been given the standard cost, operating cost, okay, production cost, variances, and all those things. Let us go. Select the appropriate words, phrases, or numbers. It could be word, it could be phrase, or it could be number to correctly complete the commentary on the last month results. Okay. So now, Prancer uses standard, absorption, or marginal costing. To understand this, you need to see. Okay, you can see that they have fixed overhead expenditure. So they are taking fixed also into the account. Okay, so it means that it is an absorption costing they are using. In the last month, actual selling price was lower than, equal to, or less than standard. Last month actual selling price was. Are you given the selling price? You're not given the selling price of actual. You're given the standard selling price, which is 150. But you're not given the actual selling price. Then how can you answer this question? Just use your brain. Think. It is something given to you, in front of you, which you're not seeing. Definitely it is your variance. Through your variance, you will know whether it's high or low. If you see whether it's adverse or favorable, you will know it. So in the last month, the actual selling price was higher than, lower than, or equal to standard. Okay, definitely it cannot be equal, because otherwise you will not have any variance. You have a variance means it should be either be higher or lower. Okay, so we'll go to the sell, not this variance, the sale price variance. Okay, let us go to the sale price. It is favorable. Sale price variance favorable means your actual sale price is higher than the standard. So last month actual selling price was higher than standard. That's why you are having a favorable variance. Okay, next, actual units sold were dash budgeted and actual sales revenue was dash. Okay, oh, so first you have to know the number, and also you have to know more or less than. Okay, so actual units sold were, what is actual units sold? Okay, for that you need to know the formula for the actual units sold, which I will not be telling you now. So make sure the amount is 1200. Okay, that is no. But is it more or less than the budgeted? It is. Just look at the sales volume variance. It is adverse. Adverse means actual is less. So actual units sold were 1200 less than the budgeted, and the actual sales revenue was, what is it? You just have to name the figure. That means you have to do the calculation. Okay, so when you are getting the calculation, I will just give the figure. It is this. Next, the production was dash than budgeted. Okay, it is 100 unit less or more than budgeted. So if you see the variance, okay, you will understand, looking at adverse or favorable, whether it's more than or not. It is 100,000 unit less or more. Less. And finally, the last one, material cost. Material cost, the biggest cost variances were our decision to pay dash price more than standard price rather than the company using dash budget. Okay, where the less than, definitely, where decision to pay less than the standard price resulted in the company using the dash budget. Which budget? 320 kg. It is definitely 320 kg. Okay, more than original, less than original, it has nothing to do with original. You compare with the flex. Okay, more than the flex, more than the flexed. So all these things, definitely a student who have not attempted or who have not gone through budget will not understand, but make sure that you do, so that now you know overall what is the syllabus looks like and what are the questions that can come for management accounting. Okay, the scenario and all. I just wanted to give you a feel of how an actual exam looks like. Definitely there are some differences with the actual exam and this, but more or less you will be given questions like this and you have to answer. Okay, so get ready for it, and I hope that after taking this or seeing this video, it will help those students who are planning whether whether they should take ACC or not, because definitely looking at first three papers, a student understands the nature of ACC and all, right? And next video is definitely on financial accounting, something which I love to teach, right? All income statement, all reports, all those things we are going to study there. Okay, everything about dividend, equity shareholders, everything, bank loan, everything we are going to study there. Okay, so till then, see you in my next video and don't forget to subscribe.